Dogecoin, our favorite cryptocurrency, is bouncing back again. And this is why we're back with some important updates related to Dogecoin and other cryptocurrencies. Dogecoin has once again captured the attention of crypto enthusiasts and investors alike with its recent price surge. The cryptocurrency, which started as a joke, has proven to be a formidable player in the market with its volatility and unique community. Twitter's recent deal with eToro to offer crypto trading has given Doge a boost, with the coin rising by almost 6% from Wednesday's low of 8 cents. Twitter CEO Elon Musk's frequent tweets about Doge have helped to increase its popularity and value, with the social media platform even changing its logo to the Doge logo last week. Despite a recent slump of over 22%, Doge's value has now climbed back up to almost 9 cents, thanks to prominent crypto Twitter trader Tree of Alpha tweeting a bullish thesis for the coin. Tree of Alpha believes that Doge's current prices make it an attractive investment, especially since it has retraced from the logo change hype. However, it's important to note that eToro does not currently offer Doge trading, so only select cryptocurrencies such as Bitcoin, Ether, BNB, and IOTA will be initially available on Twitter. Nonetheless, Doge's recent surge shows that it still has the potential to surprise investors and enthusiasts alike. Moving on, Andrew Kang's recent update on his Bitcoin and Ethereum predictions has been creating quite a buzz among crypto enthusiasts. Kang's bullish outlook on the market is no surprise, given his long positions on the crypto market. The numbers he shared in his recent tweet, 38, 3.8, and 3.8, have caught the attention of investors, with many eagerly anticipating a potential bullish run. The 38 target for Bitcoin suggests that Kang is optimistic about the crypto's potential to recover from recent market dips. Bitcoin has been trading above $30,000, and Kang's prediction could be a sign that a further bullish run is on the horizon. However, it is important to note that Kang's predictions are not guarantees and should be approached with caution. The crypto market is highly volatile, and prices can fluctuate rapidly. Kang's prediction of a rise to 3.8 for Ethereum is also noteworthy. Ethereum recently experienced a relatively smooth staking unlock, and the market has shown optimism, with many investors re-entering the market. Kang's prediction could be a sign of further bullish sentiment for Ethereum. The most intriguing part of Kang's tweet, however, is the mysterious $3.08 target. Speculation has been rife among his followers, with some suggesting it could be related to Arbitrum, a promising Layer 2 scaling solution. The recent 20% increase in ARB's price has added fuel to the speculation that Kang's $3.8 target could be related to it. If this speculation proves accurate, a rise to $3.8 would represent a significant increase for ARB. Investors should approach Kang's predictions with caution, as market conditions can change rapidly. However, his bullish outlook on Bitcoin and Ethereum, as well as the potential link to Arbitrum, could be a sign for anyone who has been thinking about entering the market. As always, it is essential to do thorough research before investing in any cryptocurrency, as the market can be highly unpredictable. The recent surge in Ether options activity is a positive sign for the cryptocurrency market. According to reports, the ETH options market has seen more activity than the Bitcoin options market in the last 24 hours, with major exchanges like Deribit recording over $1.23 billion in ETH options contracts traded. This is almost 60% of the total crypto options activity, which is a significant increase from the previous year. The use of options has become increasingly popular among traders in recent years, with options allowing traders to hedge their spot/futures market exposure and to acquire an asymmetric payout. Call options, which give the right to buy, are typically used to bet on a price increase, while put options, which confer the right to sell, are used to speculate on a price decrease. As such, the increased demand for Ether calls is a sign of bullish sentiment in the market. The uptick in activity in the Ether options market follows Ethereum's successful implementation of the highly anticipated Shanghai upgrade. The upgrade has allowed for withdrawals of over 18 million Ether staked in the network since December 2020, de-risking staking and boosting network security in return for rewards. Since then, Ether's price index has rallied by over 10% to an 8-month high of $2,115, outperforming market leader Bitcoin. The positive sentiment towards ETH can be seen in the options market, as out-of-the-money calls in ETH have seen strong demand. Calls at strike prices above Ether's going market rate are considered OTM and are cheap compared to calls at strikes below the current spot price. This indicates that traders are expecting the price of ETH to rise further and are willing to pay a premium for call options that are priced higher than the current market rate. The increase in demand for Ether call options is also reflected in the short-term and long-term options skew, which have flipped positive. The skew measures the spread between the implied volatility premium or prices for calls and puts. A positive skew indicates that there is more demand for calls than puts, suggesting that traders are more bullish than bearish on the market. Overall, the surge in Ether options activity and the positive sentiment towards ETH in the market bodes well for the future of the cryptocurrency. Now let's talk about an outrageous update from today that made a lot of Dogecoin fans jealous. Aptos, a small crypto, experienced a significant rally of 7.4% within a minute after Twitter CEO Elon Musk tweeted, "I Apto TT," on Friday. However, the surge did not last long, as Musk deleted the tweet an hour later, causing the cryptocurrency to retrace the entire move higher. Interestingly, in this context, APT stood for Advanced Persistent Threats, not the Aptos token, which led to the confusion. It's not the first time Elon Musk's tweets have impacted the crypto market. Recently, Twitter changed its logo to the Shiba Inu dog that represents Dogecoin, which sent the meme coin surging by as much as 35%. The logo was later switched back to the blue bird. Despite the retracement, the native token of the Aptos blockchain, Aptos, remains up by 8.2% over the past 24 hours, with much of the altcoin market experiencing gains following Ethereum's successful implementation of the highly anticipated Shanghai upgrade. However, it's important to note that crypto markets are highly volatile, and investors should always approach such rallies with caution. It's wise to do your own research, stay updated with market news, and not rely on social media posts from influential figures to make investment decisions. Now let's talk about some updates that personally scared me a lot this morning. The U.S. Securities and Exchange Commission is reopening a proposal from last year that would now explicitly target decentralized finance platforms for crypto transactions as exchanges that need to be regulated. The SEC proposed expanding the definition of the word exchange in January 2022 to capture a broader swath of trading activity in the U.S. At the time, the agency said in its proposed rulemaking that certain entities engaging in trading activity were not regulated as exchanges, creating a regulatory disparity. FTC Chair Gary Gensler contends that most crypto platforms are already operating as unregistered securities exchanges, with or without the latest tweaks to the definition of what it means to be an exchange. The updated proposal now uses more direct language that includes DeFi in the widening definition of regulated exchanges, and it details its estimates on how much that change is expected to cost the industry. The agency is not looking to define DeFi in the rule, but will evaluate each situation by how the activity is being handled, including whether there is an intermediary and what service that intermediary is providing. The crypto industry has long advocated for U.S. rules that can bring certainty to how the companies and activities need to operate, though prominent crypto executives and their lobbyists have also said that the SEC's position that they need to register and follow existing securities laws won't work for this industry. The SEC has broadly chosen against a tailored approach to the cryptocurrency sector that would acknowledge how it differs from the rest of finance, with Gensler routinely arguing that long-standing securities laws are sufficient. The SEC had pushed this exchange definition rule and other proposals last year that had suggested that the agency meant to formalize its reach into the digital asset sector. Later, the agency became more explicit about having its eyes on digital assets when it issued another proposal in February that could bar investment advisors from keeping assets at crypto firms. With each proposed rule, the SEC's walls are closing in on crypto businesses that insist there's no path for them into regulated finance. A very bearish update from today. Peter Schiff, a well-known economist and gold bug, has sounded the alarm on the current banking crisis, warning that it is only the beginning of a much more severe financial crisis. Schiff has emphasized that the crisis should not be dismissed as a minor issue, as it has the potential to cause significant damage to the global economy. The economist has pointed out that the crisis is not just limited to a few banks, but is, in fact, a financial crisis that could impact the entire financial system. Schiff has compared the current crisis to the subprime mortgage crisis of 2008, which was initially dismissed as a minor issue but ultimately led to a global financial crisis. Schiff has also highlighted the risk of big banks failing, noting that while they may be too big to fail, they are still insolvent. This means that if these banks were to fail, the government would need to print a significant amount of money to prevent their collapse. Schiff has warned that this could lead to a run on smaller banks, creating a massive problem for the financial system. The Federal Reserve's recent forecast of a mild recession has also raised concerns for Schiff. The economist has pointed out that the Fed doesn't usually forecast a recession, so if they can see this one coming, it is likely to be massive. This is a cause for concern as the current crisis has the potential to snowball into a severe economic downturn. In conclusion, Schiff's warning of a looming financial crisis is a call to action for policymakers and individuals to take the crisis seriously. It is essential to recognize the potential risks and take appropriate measures to prevent a global economic disaster. The crisis may not be over, and ignoring it could have dire consequences for the global economy. We talk about the good and the bad news in the crypto market because it's incredibly important to have a clear view of what could happen in the market. And that's it for today's video. I'll see you in the next video.